Priscilla Barrera with the Investing News Network, and here with me today is John Kaiser of Kaiser Research. John, thank you so much for joining us today.
Priscilla, I'm glad to be here today.
Okay, that's good. So we're here at the Sprott Show in Vancouver. How are you finding the event so far?
Well, this event is really productive for me because there's a large range of very good quality companies here. So I've had excellent opportunity to check out new ideas and also check up on some old ones. In terms of the audience, I suspect the numbers are down from the past year or so, but I am quite impressed by the enthusiasm and the mood, given that we are in what seems to be the bear market that started in 2011 and had a brief interruption in 2016. So although there's this pervasive cloud over the resource sector, somehow this conference feels really good.
All right, and as you mentioned, we're back in this bear market. In the current context, can investors still make money? What would be your best piece of advice for this season?
What we're seeing now is almost a relentless sell-off. The institutional audience is giving up on the resource sector. There was a bit of a bump. There was a bump in 2017 after the Trump's election because there was hope that there would be a big infrastructure spending boom. But that has not materialized. Instead, the priority of the administration appears to be a trade war. And metal prices have fallen in the past couple of months as the markets have realized, yes, Trump is serious. He does want to unleash a trade war, which could have catastrophic interim consequences. So a business cycle that maybe had a couple years left, the one that started at the end of the financial crash in 2008, it is being shortened. Interest rates are rising, but the difference between 2-year and 10-year T-bills is almost flat, telling the market there is actually a recession around the corner. Gold has retreated because, as we saw in 2008, a recession will cause a financial crisis, and gold will be one of the hard assets that's sold first to deal with everybody's liquidity crunch that they are in. So we're in this strange mode of anticipating a very negative macroeconomic downturn, which hasn't actually happened yet, because things are still booming in places like the United States. China is grappling with a bit of a problem. Its ability to keep expanding itself is running out of room. But for the juniors, the risk capital has been sucked away by cannabis and cryptocurrency, blockchain type stories. These don't have an obvious upside limit, so that as long as the trend is positive, it will keep sucking in money. Eventually, that will stop. I think October 17th is an important date for Canada because that's when cannabis becomes legal, and then companies will have to start showing profits and demonstrate that once marijuana is not illegal, it will still be as profitable to produce and sell as it is when it is illegal. But that'll take another 6 months to unwind. For the resource sector, I see it, this is actually an opportunity, but it is what they call catching knives and falling anvils. You have to be prepared to buy and see the stock go even lower, because we do not know how low stocks will go in a capitulation event. But we are seeing some positive developments. For example, South 32 is paying $2.1 billion to buy out Arizona Mining, which was a big discovery made at the beginning of, which became evident in the beginning of 2016. So that's a big cash infusion. Dalradian is being taken out for about $500 million. So that's a cash infusion coming. Today there was an announcement that Peregrine Diamonds is being sold for about $100 million to De Beers, which in my view is so cheap that this just has to be the opening bid of a competitive auction. I can't imagine that some groups like Rio Tinto and Washington companies are going to stand by and let the Friedlands give a gift to De Beers. So even though maybe this will go for a couple $100 million, these are stocks held by investors, a lot of small people, not just the Friedlands themselves, and they've been demoralized by the fact the company has been successful, and yet it has not been rewarded in the market. You cash them out finally at a significant premium where the stock has been. All these little small cash infusions will start to restore the faith. Because one of the big traps I've seen is people like myself have backed companies. The companies have made fundamental progress, and yet we've not seen validation of that progress in the form of increased market capitalization. Instead, we've seen dilution through additional financing, and nobody wants to, or they can't even buy anything new because they're stuck in all these quality positions for which there is no liquidity. The glass is half empty. So the big bet now is to look at these types of companies and say, this wall of worry about this trade war toppling the global economy into a recession or even a depression is wrong. That in 3 to 6 months, it'll have proven unfounded, and there'll be a reversal. The metal prices will snap back. The big mining companies who don't really have much in a development pipeline, they will start to make more acquisitions such as South 32. And of course, we don't expect huge metal price gains like we did during the China super cycle because there's not that scale of a demand or magnitude of a demand increase coming. So there's going to be a focus on discovery exploration. So I'm particularly keen about discovery exploration companies. Their valuations are extremely low in terms of their potential. And there's many of the companies here are optionality type companies, but there's also quite a few of these companies which hope to make a big discovery that works at the metal prices we have. So getting rid of, assuming that metal prices aren't going to go significantly lower than they are now, that they are going to come back a bit and stabilize, you got to make that assumption if you want to be in this space.
Right, and as you mentioned, you're looking at the exploration sector, and here at Sprott, you gave a presentation talking about the different regions that you like right now. Can you talk a little bit about what's happening in Pilbara?
Yes, last year I introduced the Pilbara at this conference because this was something brand new. This was possibly WITS 2.0, and WITS 1.0 in South Africa, that's a 2.6 billion ounce system of which 1.6 billion ounces have already been mined at a good grade of 10 grams per ton or better. And all of a sudden there was this possibility that something similar was present in Australia, in the Pilbara. And this was all owned by juniors. And Novo was, of course, the flagship company that had scooped a 10,000 square kilometer land position once Quinton Henney realized that, wow, this actually did happen in this area too. And that sort of discovery, an off-the-scale discovery, something as big or maybe even bigger than South Africa over 100 years ago, that would really breathe life into the junior sector. All of a sudden, the glass is more than half full. Other projects, risk capital comes in. Unfortunately, in the year since then, they haven't found the WITS 1.0 style of mineralization, which is, even though it's detrital, it is still relatively fine-grained, and you can measure it with a conventional drill core assay over the 0.5 to 1 meter thickness of these gold-bearing high-grade reefs. Here, it just seems to be, it's all nuggets. It's not fine gold. It's in the conglomerate bed, but there's a nugget here, a nugget there, and they're trying to figure out what scale of bulk sample is needed to measure the gold content. And then, of course, there's the problem is even if the precipitation theory is the correct explanation as to how all this gold formed and why it's all over this 350 by 400 kilometer large craton, the question is how do you measure when it changes here and there because of it's been alluvially retransported. So sometimes it's higher up in the conglomerate, sometimes it's lower, sometimes there's a channel here. With at least the WITS 1.0 gold, it's all this fine gold which has been winnowed down to very fine grain size. And when you find a pay streak, you drill it off. Here you just don't know where to begin bulk sampling. So that whole play is stalled right now. Other companies like Pacton Gold have gone in there and picked up significant land positions. It's now all about the what I call the edge of the wedge, where the basement and the Mount Royal conglomerate meet, and where it peaks, and there you can get your tractors and stuff in there, and backhoes, and dig it up and collect bulk samples. As far as going down dip, that's problematic because nobody at this stage is going to put big capital into driving a shaft down, sinking a shaft, and then taking bulk samples until we know that this gold can hang together at 5 grams per ton or better and be large bulk mineable targets. So it could still happen, but we have to wait for Noble to really show us how do we measure this stuff.
All right, and you also mentioned that you're looking at Nevada. Can you talk a little bit about the company you like the most there right now?
What I like about Nevada is, I call it Nevada 2.0, which is looking under the gravel cover, and in some parts there's a younger volcanic cover that has obscured the incredible Carlin-type gold deposits that were laid down 45 to 25 million years ago. And there's been 250 million ounces already identified. Nevada is the biggest gold producer in the United States. Since the late 60s, it has emerged out of nowhere and just dwarfs all American gold production. But because of this basin and range event that happened 15 million years ago, well after these deposits formed, half of Nevada has been downdropped and literally hidden from the explorers. And they found the stuff that's close to the ranges where you can sort of chase stuff under the gravel and grid drill and find it. But the next wave is to use a lot smarter geological sleuthing, and new tools like hydrogeochemistry to identify potential hotspots where you can focus traditional exploration. And the company that I've backed for the last 10 years is Nevada Exploration, Inc., and they've generated an incredible target in what they call South Grass Valley, where they have lower plate rock that's reasonably close to the surface, and that's the best host for these Carlin-type deposits. And they've got the gold and groundwater geochemistry, hydrogeochemistry, along with the Carlin Pathfinder elements. They've done all the geophysics, and if they raise the money needed to drill this and confirm that here is a blind deposit, and others like Kennecott have drilled holes in the vicinity and only provided evidence of alteration that there's a system there, but they didn't hit the gold itself. But Cortez Hills deposit, which would be worth $2 billion if you found it, another one, it's almost a near vertical thing, so it's so easy to not hit something like that. But when you can see that there is a prize with potential big size through clues like hydrogeochemistry, that creates the will to hunt this, and new science about how fluid flow behaves in rocks with the alteration patterns, what isotopes drop out here and there, allows now, even with drilling, to start vectoring in. So you need a bigger program. It's not like come up, do a sniper kill shot in the target and hope you deliver the goods. You have to have a vectoring project. And so Nevada Exploration, Inc. is the one that has developed several targets like that. It has a map of Nevada where the regional sampling has showed here's other potential areas under the basin gravels that need to be followed up. So not only would they, if they are right that there's another Cortez Hills at South Grass Valley, and the stock, could go to like $20 to $30 if it didn't have to undergo too much dilution along the way, they could start repeating this. And obviously they can't stake all of Nevada. It would unleash an incredible exploration boom. And one of the sort of consequences of Trump's trade war policies and this Fortress America, retreat to America, is this back to America theme. And I think there'll be a wave of interest amongst American investors in finding more deposits, new deposits in the United States on domestic soil, so that we end up in some sort of war with China or Russia or whomever, and the supplies from these countries are cut off. We have everything we need inside the country. So it can almost become a patriotic thing to invest in companies that are looking for gold and other metals in the United States. And with regard to gold, the United States US dollar is the reserve currency, but with the policies Trump is pursuing, he is alienating the rest of the world, almost forcing them to work around the United States without it. And that is a way of accelerating the marginalization of the US dollar. So having a domestic beefed up resource of gold in the United States might come in very handy. So there's also strategic reason to look for gold in the United States, even though gold intrinsically is not used for many productive things.
All right, and looking ahead to the second half of the year, any other factors that could impact the exploration sector that maybe investors should pay attention to?
Well, I think the critical event is the November 6th midterm elections in the United States, and the Democrats hope to regain at least the House. And once they're in there, then we have the situation that we had in 2010, when the Republicans seized the House and stopped Obama from pursuing any further policies. So Obama had to kind of negotiate with the Republicans about what was going to be done. So Trump's decision-making will have some practical brakes put on it, and the Republicans will have cover. They can blame the Democrats for stuff not happening, but they can get back to a pragmatic strategy. Okay, let's get stuff going that works. And yeah, Donald, this was great that you got everybody worked up about trade wars and stuff like that, but as you can see, it's not really working. But let's talk about everybody getting tariffs much lower and get back to a proper free trade where you don't have 10% tariffs in this country. Now let's just go make it zero tariffs. So that's the kind of exit for the exit strategy for this trap that the Republicans have been led into by Donald Trump. So and even if they retain everything, then they got 2 more years of doing as they please, and then Trump may find the brakes put on him, the pressure to do crazy things and stop the Democrats and rally the base, that disappears. So there could be a moderation that starts to kick in no matter how it plays out. Right now, and we may see this perception, this realization even happen in September, where all the craziness of the summer disappears. So that's what I would be watching for. But to be on the safe side, look for discovery exploration plays that are cheap and beaten up, because none of this stuff matters if you have a really big gold discovery, say in Nevada at that South Grass Valley project.
All right, so speaking about finding good companies, could you tell our audience what are your top 3 stocks for the year and why you like those companies?
My absolute favorite, and one that's perfect for this type of uncertainty that we have, is Scandium International Mining Corp. They have their mining lease. They want to produce scandium from the Ningen project. They need to raise $100 million, but management has decided that rather than try and promote the stock up and raise money to build a mine, they have spent the past 12 months developing offtake markets, identifying many different fabricators. They have bypassed the master alloy middlemen and are doing it themselves so that they can deal directly with the customers. And their goal is to do little tiny 2 to 4 ton offtakes with maybe 10 or so different groups. And that makes sense because there's no guarantee that the mine will produce as expected. So the fabricators who plan to use this, they can't take a big risk and commit to taking all 35 tons. And what we're waiting for, that the market's now quite cheap at 15 cents because people say, oh, when is this ever going to happen? This is really boring. So it's being discounted because it's like watching paint dry. But the day they get, say, one of these done, all these other ones that are working with the material will see it, and you'll see boom, 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 all of these little small offtakes, and then they have 20 tons spoken for, and then the stock goes up, and the CapEx gets done at a better price than, say, 15 cents, maybe 50, 60 cents. And then people, all these different parties, if Ningen delivers as expected, they'll have the potential to increase that to say 10, 15 tons. So all of a sudden you have in place the ability to expand from 35 tons a year to 100, 120 tons of output per year. And that's when the market gets that. Then you'll see the valuation of a stock like this in the $1 to $2 range. And it's all about taking 2 2% of the $100 billion aluminum market and penetrating it with scandium. And it's not done very much because it has never been a primary scalable source of that available for this. It doesn't matter if we have a recession. So contracts at 20%, you're still only tackling that same physical volume that you can put 0.1 to 0.3% scandium into. So it's actually immune. It's a technology innovation. It's not really disruptive. It's more of an enhancing thing. It creates all kinds of cost savings for fabricators, and it falls into that whole lightweighting category of using less energy to move stuff around. So that's my first top pick right now that I think is crazily undervalued. The second one is Nevada Exploration Inc. Now, they need to raise money, so there's going to be a dilution hit either through an equity financing or a farm out. They've been dealing with various groups of companies, and so far there's no deal. But if a deal were to come, well, then they'd lose probably at least half of the South Grass Valley project. But then they have the other things to work on, and the stock could go higher, and they could finance, and then that is off to the races. And the third one is in zinc mining. Zinc has retreated back below $1.20 as part of this anticipatory wave of the trade war-induced recession. But they are in the midst, or they just finished a drill program. They've drilled 5 holes. Most of them are deep holes. They're awaiting assays for 4. They have confirmed the extension to the west, so the West Desert deposit, which is in the money even at today's $1.18 zinc price. They will be able to build that bigger. We have to see what the eastern potential is all about. They got sulfides in the core, but until they have assays, they don't know what's going on over there. They will be returning later this year. And the stock, they did this big dilutionary financing, 35 million units at a dime last year, which was spread amongst the different brokerage firms. And so we've had this problem that all these frightened shareholders have been selling the long position and just clipping the half warrant to ride it out and have no exposure. So this is kind of the predicament. Everybody's so afraid, so risk averse right now that none of these companies are getting any traction. But at 10 cents, this stock is a bargain, even if all the drilling is a bust. But we've already seen that the drilling is at least partly successful, and we'll see what the rest is like. So these 3 stocks, 2 of them 15 cents, 1 10 cents, fundamental assets in the case of Scandium International and in zinc mining already in place, and then incredible blue sky opportunity in Nevada with replication potential. It's not like they found that one best spot. They have many, many spots, the treasure map of Nevada, and if they make one breakthrough, the glass is half full for all their other targets, and everybody will want into that game.
All right, John, thank you so much for joining us today.
You're welcome.
Once again, I'm Priscilla Barrera with the Investing News Network, and this is John Kaiser of Kaiser Research.